All right, good stuff. We are recording. We are recording. Yo, it is so good to see you. It is 10:03 in the morning, December 1st, 2000. A lot of really good, amazing stories from you all on how good Thanksgiving was. Had a great, excellent Thanksgiving. Made brisket for the first time. Came out amazing. I'll be doing it more often. As a matter of fact, there's a brisket in the smoker right now. I was like, I'm going to make brisket like 2, 3 times a week moving forward. That's how good it came out. It is so good to see you all. I cannot wait to go over all the information, a new listing to pending ratio, take a look at the market cycle, and see what's going on. How did November end up, and what's December looking like? I'm really excited to go over this information. I want to remind you all that we do have our Wednesday meeting. I will be sending over the contract proficiency for Wednesday. Y'all had a whole week off. I hope you enjoyed your entire week off, but I'll be sending over the contract proficiency. Looking forward to reviewing that on Wednesday. We do not have a meeting this Friday. I will be heading back to Chicago this Friday. I'll be landing on 6-degree weather. It'll be 6 degrees when we land on Thursday evening. And then, of course, we pick back up as soon as I come back. So this is one of our last trips back up to Chicago. So there you have it. Melanie Price said, week off, what are you talking about? Full Thursday, Thanksgiving Day. I think we all worked every single day, which is the joy of real estate. It's one of the things I love about real estate. Well, y'all, we've got a ton to go over. We're going to go ahead and hit it hard, and we're going to start with our famous new listing to pending ratio. As you know, this is the single best leading market indicator available for the entire area. This is where we are going to take the ratio between new properties that came in the market and properties that went under contract. First thing we're going to do is we're going to go backwards in time a little bit. We're going to go from November 17th through the 24th. Keep in mind that we're focused on the 6-county area: Travis, Williamson, Bastrop, Burnett, Caldwell, along with Hayes County. And we're going to take a look at pending. This number is going to go up to 375. 375. Let me go ahead and just get my number lock key here on my keyboard. So I'll just go ahead and do the other one. 375. Then let's take a look at active under contract and see if we have to update that. That stays the same at 440. At 508, let's take a look at pending. Pending is going to go up to 418, 418. Let's go to the 3rd to the 10th. That's going to be 408, just one, but we're going to want to make sure this is perfect. We're going to go from the 27th to the 3rd. That's 471. Good stuff. Let's go from the 20th to the 27th. That's going to be 473. So we are good to go. We went ahead and updated this week, and that's going to be from the 24th to the 1st. And of course, we do expect new listings to plummet because of the Thanksgiving week. So we do expect it to plummet, and that number is going to come in at 449. 449 new listings this past week. Price increase 103. Price decrease, we're looking at 845. And that's going to give us 89%, not that far off from the 90% over the past 2 weeks. Let's take a look at back on the market. 119 back on the market, 27%. Really interesting article came out from Zillow or Redfin, I believe. 30% of properties under contract are coming back on the market across the entire nation. And across the nation, that's the single largest percentage. This is coming back on the market. Redfin article that came out. Let's take a look at active under contract, and we are at 219 active under contract. And now you get to guess. I need 5 guesses. This is where you get to guess. Seth is going to start us off at 199. Oh, wait a second. We had someone before Seth. Melanie came in at 211. 222. We've got Sonia, consistency. I read conspiracy there. I'm going to choose conspiracy. I'm not going to, we've got Sonia at 222. I love it. We got Kevin Walker at a very bearish 121. Kevin's like, it's cold outside. I'm going to apply that to real estate. We're going to go at 121. We got excuse me. 1, 2, 3, 4. I need one more. I need one more brave soul to put your entire career on the line to guess on how many pendings we had over the past 7 days. Ryan is going to wrap us off at 190. Let's go away. We are, oh my goodness, we're at 197. 197. Well, that's not bad. That ain't bad. Yeah, you were 2 over. That is not bad. 197, 414. Now, let's take a look at a few things here. Let's take a look at the year over year. 2 weeks ago, we had 10.2% more new listings compared to 4. So are we going to end positive? The answer is yes. We are going to get 4 additional new listings coming on the market between now and 11:59 p.m. tonight. That's going to happen. So that's going to be positive. We're 4 less on price increase. That's going to turn positive. We're 9 less on price decrease. That's going to turn positive. We're 16 less on back on the market. That's going to turn positive. But we are 349 less on the combination of active under contract and pending. 2 weeks ago, we were down 151. That's going to improve a little bit. We're going to settle right around the down 100 to 120. So if we had 120 here, that would be, or negative 120, that would be down 12%. Best case scenario, we're going to be down 10% year over year on properties under contract. What do you think about that, you all? The ratio this week last year was 1.3, and we're starting off at a 0.73. I would say that we're going to end around a 0.9 to 0.95 when this is all said and done. So for the past 2 weeks, we broke the trend. We broke the 5-week trend where pendings were higher this year compared to last year. We had a few different weeks where the ratio was higher. 3 weeks ago, the trend was there. Yeah, 9.5 versus 9.4. So that was perfect. Yeah, so we had these 4 weeks. Yeah, there we go. Oh, except for this one. The only reason why we had this one. Yeah, no, this is 9.4 versus. Yeah, okay, so we have this week. October 20th, the week of October 20th, the ratio last year was better. And the only reason why is because we had way more new listings come on the market. Even though we had more pendings, we had a higher number of new listings coming on the market. So therefore, the ratio was better last year versus this year. But we've had a really good run. The month of November was decent. Towards the latter part of November, we noticed a reversal where pendings were higher. We had October, what was it, September? Fairly decent going into October, backtrack. November changed over a little bit towards the second part of November. And now it looks like into the end of November, it looks like we're backtracking a little bit on pendings. And we noticed that when we track pendings year over year, that number actually went negative. Let me show you. We're going to go to active residential inventory and take a look at this. So you see we were negative on pending, and then we just went positive 0.3%. I'll take any positive number. We were positive, then we went negative. Then we're back positive by just a little bit. I mean, just a tad. This one was 0.001, but I'll take that. And you see how the activity index reached 20%, dipped back down to 19, now back up to 20%. We're going to take a look at the daily activity just to see what's going on with that daily activity. Minimize this. So this is going to be that week over week. Bottom line is a 45.6% month over year over year, same week year over year, is not something that we're going to turn positive. As a matter of fact, that is a really big gap, very big gap. Let us update the entire month. First thing we're going to do is we're going to go to October. That's going to be 1701. So we're going to go 1701 right there, 1701. And now we can start updating all of the new listings for the entire month of November. Let's see how November closed out. 2,638. 2,638. Interesting. We actually ended up with less new listings for the entire month of November compared to November of last year. 2,638 versus 2,698. Not by much, by 60. We had 60 less new listings come in the market in November compared to November 2024. Price increase. Rest 6 had more price increases compared to last year. Price decrease, 5,618. Way higher, 5,618. Almost 1,000 more. Almost 1,000 more price decreases this past month compared to last year, 90%. Last year was 88%. When you divide the number of active listings and take a look at the active listings, oh, yeah, it is real. And what do you think that big drop, that 14,384 to 12,801, what do you think that was? Any guesses, you all? Yeah, a lot of withdrawals, a lot of expireds. We're going to take a look at the expired, see if we set a record on expireds. It's not going to be a yearly record, but that's going to be reached in December. But it ought to be a November record. We ought to easily have beaten these two numbers on withdrawals and expireds. Let's see if that happened. So when we divide up the active listings, we're at 44% by all the price drops. 593 back on the market. 593 back on the market. 22% back on the market. That number goes up. That's, wow, interesting. That's going to be the highest one so far. 593 back on the market. That's the highest percentage going back to when? Going back to January 2024. We do notice a little bit of an increase when it comes to November, December, January on back on the market, especially November and December. We see that 23, 28, 21, 23. And then here's that 22%. Little bit of a bump up on the back on the market because there are less new listings. Yeah, you know what? That's a very good point. Very good point. We've got a really encouraging number, 1514 active under contract. Here's the good news. Active under contract, we beat November 2024. Active under contract coming in at 1514. We were at 1498 November 2024. So that's good. Better November 2025 compared to November 2024 and active under contract. What about pending? Yeah, pending, different story, 1271. So when you add those two together, we are down, what is it, 200, 300. We're roughly down 300. Are we going to make up 300 from the agents submitting their pendings? Not 300. I'd say we're going to get close. We've got about 200 pending transactions out there that builders and agents have not updated, that over the next 2 to 3 weeks, they'll be updating. I would imagine that this number gets up to something closer to that 3,000 mark. So we are going to underperform last year when we look at the combination of active under contract and pending, which means that we're going to underperform the ratio. We're going to get close. I would say we're going to get to 0.91, but we're not. There's no way that we're going to get to the 0.94. We're not going to beat the 46 additional properties going under contract in order for us to beat last year. I don't foresee that happening. So we're going to have a little bit of a worse ratio this past November compared to last year. Now let's take a look at the solds, because something really weird is happening with solds. Let me ask you this. Do you think that solds beat out last November, or do you think we're totally far off? What do y'all think about solds? And then we're going to talk about pricing. But what are your thoughts on sold? Do you think we had a good sold November so far? Let me lower this. Yes or no? Put it over chat. Do you think we had a decent sold? What do y'all think? You know what? I think we're under. Okay, no. Yeah, you know what I'm going to do? I'm going to go withdrawals and expired first, and then I'm going to give you the sold. Let's first do the withdrawals. There we have it, 973. Over 100 expireds, 693. 693. These two combined, we're looking at, 1,666. Uh-oh. No bueno. No bueno, which is Spanish for Taco Cabana, just in case you're wondering. We've got over 60. Thank you, Ava. Thank you, Bertina. We've got over 6 were purposely removed from the market. Well, purposely meaning they automatically expired or they were purposely from being withdrawn. That's a lot. That's a really big number. That's a big number. So it looks like we're going to have a close to record November on quits, what we call quits. Now, let's take a look at the closed transactions. I have to go to a different screen right here, so bear with me. And for lagging closed, we do. This number is going to go up to 2,400. Let's see if we have to update anything for the month of September. That's going to be 2643. 2643. Let's see if August, it needs to be updated. That's going to be 2739. That doesn't need to be updated. How many expireds typically get delisted or relisted? 30%. 30% of expireds get relisted within a 4-month period. 30% get relisted within a 4-month period, which I would have imagined that it was a higher number, but when I actually went and just got 10,000 properties and ran through everything, it came out to that number. I was expecting a higher number, but that's the number that it comes out to. A certain number of them, obviously the person just stays put. We've got a certain number that get converted into rental properties, and then we've got roughly 30% or so get relisted within that 3 to 4 month window. Very good question. Now let's take a look at November to me. It starts with a 1,852. 1,852 closings. Now, we get it. It was Thanksgiving. Agents are really bad when it comes to updating sold properties. But at the same time, it was on Wednesday. No closings happened on Thursday. Very, very few, if any, closings happened on Friday. So I don't expect this number to all of a sudden jump up to 2,200. At best, we'll get up to 2,050 to 2,100. But we did experience a significant pullback on the number of properties that actually closed in November, which is really interesting. Let's take a look at the year-over-year comparison. Let me make this a little bit bigger. For the 6-county area, new listings down 2.2. Last month, year-over-year, we were up 9.4. We had 20 more price increases, 963 more price drops, 31 more back on the market. There's that positive number. Active under contracts are outperforming last year. Really encouraging. The pending, though, is going to be a different story. We came really close last 2 months pending. We were up 181. Now, all of a sudden, we are down 9.3% on properties under contract. We're down 287. There's no more going by historical data. I was explaining this to a seller at a listing appointment this weekend. It's a very interesting comment. Do you mind expanding on that, Melanie Price? I love that.
Sure.
You mind expanding on that?
I was going over, when pending.
Can't hear you for some reason. We even tested it. Didn't we test it? We tested everything and it was working perfectly, didn't we? Yeah, I just cannot figure out a way to actually hear you. We even tested it. We tested it. Maybe it's when I hit the recording. That's probably what happens, but I will figure out a way to hear you no matter what. Give me 1 second. All right, let's try that again, Melanie.
Can you hear me?
Yes, I can hear you.
Okay.
Okay, that's what I'm talking about.
So we were going over the charts that show, at the beginning of the year, how pendings start going up, the activity index starts going up. And, I was saying that we used to tell all of our sellers, like, be ready by the end of February or in February.
Mm,
And he said, oh, that's what I want, and I was like, but I had also explained to him that this year, that's the advice we gave, and we missed the mark
you're right.
because it was actually earlier. And so when he said, well, I want to hit it at that time, and I was like, well, again, remember that this year was different. So we don't know what's going to happen next year. So we're going to be ready on January 1st. I was like, January 1, we're going on the market because we don't know. So yeah, the historical data is like out the window right
That's a
now.
very good point. That's a very, very good point. Everything is happening faster at an accelerated rate right now. And the activity index is actually not recovering as fast as we've noticed in the previous years. And I agree with you. Everything in the data right now shows that we're going to see this really early January flood of inventory that's going to hit the market. I certainly expect that. I would be shocked if we didn't see that. Positioning your sellers with that mindset and just being one of those first properties to hit the market before that flood of inventory hits the market, very wise. That's certainly the direction that I would go. So good for you on having that conversation with your client. And I do agree with you. You're making a very wise statement that's really hard right now to look at historical context as far as inventory, even certain subdivisions. When you have a month like November, and we're going to take a look at pricing here shortly, where it was a whiplash. I mean, October, one of the best Octobers on record, and did that translate into the month of November? Well, let's go ahead and take a look at that. Let me pull that up here for you all, because these numbers borderline shocked me when I pulled them. Here's October. October was killer. October was fantastic. On the sales side of things, September was great. We had a 12.2% increase on the number of sold properties in September. That was just amazing. We have to go all the way back to April 2024 at that 15.3. So there's that 12.2%. Fantastic, amazing. And then that's number of closed properties. Then we go into October, we started seeing a little bit of a pullback on the number of closed properties, but then prices shot up. I mean, we had a $592,000 average sold price for the month of October. That's an 8.6% month over month increase, which is amazing. One of the best Octobers on record. As a matter of fact, let's go ahead and take a look at here's that 8.6 and the best, not one of the best. Month over month, October of 2025 was the best October on record going back 25 years. And that's just incredible, really amazing. And I'd say a lot of people were hoping that the momentum would keep on going into the month of November. And then here we have a complete reversal in the month of November. Not only do we experience a 22.4% drop on the number of sold properties at 1821, a 22.4% increase, which is really steep. We also experienced a 3.2% decrease month over month. Well, let's go back to the month over month and see where we stand. Historically, only 8 out of the 25 years we saw a gain in the month of November. So we are expecting a loss. 3.2% puts us on that upper bracket of losses. We do have a 4, a 3.6. Then we have to go all the way back to a 4.3. Here's another 2.3, 5.1. So it's in the top 5 of steepest month over month average drops on record going all the way back to the year 2000. We did notice a complete reversal on pricing, on momentum. And we're also noticing the pending side of it just starting to pull back a little bit. And of course, with that, what do we notice? We notice a slight buildup in inventory. New listings are not dropping as fast as we were expecting. Let's take a look at median. Median Not only did we see a pullback on the monthly median, but we now have a pullback on the yearly median. We're at $430,000. That's going to be less than November of 2024. Let me take a look at a comment right here. If anyone has buyers looking in Elgin, Century Communities is offering 7% plus 2025 commission. I love that. They are giving buyers 6% towards closing costs and full appliance package, blinds, garage door opener to close by the end of the year. That's incredible. That's builders wanting to push inventory as much as possible. Well, let's take a look at the median side of things. There's that $430,000, and we can see that pullback right there of 0.4. So we did break that 2-year trend for the month of November where prices were actually going up. And that's going to put us back down under that 20% drop from peak. And we can see that reversal right there. We had a really nice 2%, second best going back a while year over year. And then there's that little bit of a pullback. So now we go back to that famous chart where if today is the bottom of the market, when we calculate this last November pullback in pricing, when are we going to see the market reaching its peak value? We now forecast that forward to May of 2031. I'm going to be a grandparent by then. I mean, like Grandpa Price. We've got May of 2031. And keep in mind that this does not take into account any of the demographic shifts that are happening within not only the Austin area. If we have increased inbound migration, all of this changes. At this point, we are in an environment where we have more real estate than there are people able, willing to purchase the real estate. That, of course, could change with more affordability, better business environment, better taxing environment, better schools, better roads, and therefore more companies coming to the area, more jobs into the area. And then with more jobs into the area, you have more people being able to buy the real estate in the area. So there are a lot of maybes and a lot of what ifs. And the reversal could actually accelerate, right? We could have higher taxing environment. We could have worse school environment. And then we have less people consuming the real estate, more pressure on pricing. So many people are moving out of the area. People are big on moving close to family these days. That's a very good point. As a matter of fact, out of my 4 listings that I picked up this year, 3 of them were people relocating out of the area. And that's exactly it. They were moving up to the Michigan area, be close to family. That is what's happening. That is becoming increasingly common within our area. Let me go ahead and just lower this a little bit. Let's take a look really quick on leasing. I went ahead and updated all of the leasing, new listing to pending ratio. We don't focus much on leasing, but I do want to remind you that it is updated. And we came in at a 0.70 on the leasing side of things. The month before, though, 0.66. The month before that, 0.64. Sonia said also small investors are selling their properties even at a loss. They don't want to deal with tenants. Is it just me, or does it seem like tenants have become less qualified over the past 18 months? We're noticing more guarantors. We're noticing more credit situations, more income challenges. Of course, the assistance animal is always going to be one of those Austin traditions. You've got to have at least 2. But we are absolutely noticing more tenants that are like, you look at the lease application and something that we would have outright recommended that the landlord denied 2-3 years ago. Now we're saying, well, this ain't that bad. I've seen worse. All of a sudden, the landlord is in a position where they're having to negotiate, maybe get another deposit. But we are noticing more challenging leasing applications. When we take a look at the year over year on leasing, we are looking at year over year, 105 less new lease listings coming on the market. 28 more price increase, 45 more price drop, 0 back on the market. That stayed flat. But take a look at the properties that were actually pending. We've got 2 months in a row where we went negative on pending, but look at the least, a 17.9% drop. 17.9% drop. Let me read a few comments right here. Y'all have some excellent comments. I have one client that needs to do an eviction. Oh, brutal. I may have asked this before, but still don't understand why we are projecting prices to return to peak value. Those years were 2020 to 2022, were pandemic induced, not exactly a normal period to compare it to. Well, that's a very good statement. So here's what I'm not doing. I'll kind of explain what I am doing, but more so what I'm not doing. One is I'm not, saying that it will, right? So what this is designed to do, what this one chart is designed to do, and I've actually used this a number of times when talking not only to agents, but the consumers out there, is that when they say, well, I'm just going to wait until the market returns to normal. My follow-up question is, well, what does that mean? When you say return to, kind of return to prices, that house in my neighborhood sold for X. And then I pull this up. I'm like, well, let me give you some perspective here. If we simply apply the 25-year compound appreciation that we've experienced over the past 25 years, of which half of that is inflationary. Prices will go up simply because inflation exists, and inflation will always exist. Now, even if today is the absolute bottom of the market, will the median price ever reach $550,000? Absolutely it will. Simply because the dollar is going to be worth less and because it's going to erode in value through the theft of inflation. Now, eventually, whether it's 2031, 2028, or 2045, eventually prices are going to go back to the 550. It's just the 550 is going to buy you just a 2-bedroom because of the value of the dollar. So eventually it's going to reach that amount because our currency is constantly being devalued through the continued printing of money and increase in the money supply, specifically the M2 money supply. So our area has outperformed inflation historically. Of course, we had this mega bubble right there, and that was absolutely a bubble. And it's just communicating with that client. If your expectation is that next year or 2 years from now, we're going to be able to sell your house close to what you paid for it, that's not going to happen. Like, I can promise you that much. I can't promise you when we're going to return to peak value. It could be 10 years, could be 15 years, but I can promise you it's not going to be next year. And that's where I say exactly what you've said. That was a pandemic-induced anomaly that happens once every 250 years, and it affected our area. And we're just not going to see a repeat of this thing next year. That's not going to happen. And I remember going to a listing presentation here maybe a month ago where I told the lady, the owner, it's like, well, and she's right at that target where she bought in 2023, close to the peak, got a $20,000 price drop from list price to when she bought it, thought she bought a good deal, but her house is now worth $80,000 less. So she's like, well, if we wait until next year, can we expect to get this amount? And I'm like, no. We have to wait 10 years. Like, I'll be around. But if you want this amount, it could be 5, but more than likely it'll be 10. So this is not meant to forecast that, but it's really meant to explain the reality of timing, the reality of compound interest using that appreciation. So thank you for bringing that up. Let's go ahead and take a look at the daily really quick, the Austin Daily Real Estate Briefing. I'm sure that you all first thing this morning took a look at this. Anyone here, by the way, took a look at this? We're going to take a look at it together. We currently have in the entire MLS 14,790 active listings on the market. 57.3% of those have had a price drop out of everything. We are up 15.5% year over year on the number of active listings. This same day last year, we had 12,805. We're at 14,709. We're at 47,870 act or new listings that have entered the market January through November. That is a 5.5% year over year increase and a 23.2% above average. Pending listings. Here's the good news. Very good news. We're up 0.3% year over year. We have 3812. Last year we had 3,800. This very day last year, this very Monday, this very week last year, we had 3,800. Pendings. How are we on the cumulative pending? Everything that's gone pending. 40,917, down 1.3%. We're very close to 2023. So now let's adjust that. Let's look at the activity index and then let's adjust for population and all that. Activity index, good news. We are over 20%, 20.5. Last year we were at 22.9. Resale at 17.82. New construction at 26.52. When we look at the resale cities and zip codes, Cedar Park is doing really well at 26.53. 78728, number one zip code at a very healthy 40.91. I do have a really nice listing in 78728 if anyone wants to host an open house. The house is vacant. Let me know, send me a text message, and we will make that available for you. We have one city in equilibrium. That's going to be Cedar Park. We have 11 zip codes in equilibrium. We have 15 softening, and then 33 in the contraction zone between 15 and 20%. That's going to be 44% of the market. Almost half of the market is within that contraction danger zone. And then we've got 19%. So you add those two together, we have 47 out of 75 zip codes are in that contraction phase. The new listing to pending ratio for the month coming in at a 0.85. And you can see here, good news is that we did outperform 2023. That's really good. Did not outperform 2024. We are not going to outperform 2024. This number is going to go up. Settle somewhere around the 0.9. That's my hope, which means that we are going to outperform 2022 and 23. That's good news. That's very good news. So far this year, the ratio is at a 0.73. There's that ratio 0.73. The 25-year average is 0.82. Months of inventory, we are at 5.29, a 16.7% increase year over year. And 7749 continues to do very well at only 2.18 months of inventory. That's going to be your best zip code. Your worst one is going to be 78616 Dale at 28.2 months of inventory, which is staggering. Let's take a look at the Austin zip codes that have high inventory. 05, 14.67, 01, 13.65. 02, 8.89. So you've got some zip codes with a lot of inventory. Year over year, City of Austin is up 19.3%. Year to date, City of Austin is up 11.1%. Here's that 1821 number of sold properties so far in the month of November. That number is going to go up a little bit. People are still posting they're sold. So let's take a look at adjusted for population. For the month of November, we are coming in at 1,075. That's not going to go up by much because we're dividing it by 100,000. So even if we have 100 extra properties, that number is just going to go up by 10. So 1,075 sold properties when you look at the month of November. Cumulative, by the way, this is everything. This is every single property that has sold from January to November. That's not going to go up by much. And what do you notice on that chart, you all? Cumulative. Pretty eye-opening, isn't it? 1,075. So we are looking at a 6.8% drop, and now we're going into December with a little bit of a pullback on pendings. So I would say that once 2025 is all closed out, looking at the pendings right now, we ought to end higher than 2010. Sonia said, has the population dropped since last year? Travis County dropped, but Williamson and Hayes County picked up so much additional population that the metro area has actually gone up in population as opposed to down. Travis County is the only county that experienced a pullback in population. When you add in Hayes and Williamson County, we're still looking at an increase, a very sizable increase. 2.3% is what the demographers are forecasting for increase in population for this year. Those counties are picking up a lot of people. We've noticed a pretty sizable increase in population in those two counties. When you take a look at the number of sold properties per 1,000 agents, we're actually down compared to last year, which is really surprising. We are down cumulative sold properties. Everything that sold from January all the way through the end of November dropped by just one. We're down 0.1% year over year. We went over the sold information, so that's all good. Let's take a look at the percentile analysis. We had a really good run last month, especially towards the last 2 weeks of the month, on the bottom 25th percentile going positive. It's gone back negative. We were up 7% on the percentile analysis towards the end of November, and that's retreated. So the lower 25th percentile on price is down 0.4%. On price per foot, that's down 3%. The top 25th percentile is still up 3.8%. And it's down 0.4%. Really interesting. City of Austin switched, which means that our Thursday market data, our Thursday weekly update, if things continue the way that they are, it's going to notice a shift. The metro area is going to show positive, and then the Austin area is going to show negative. Austin has now officially flipped. Austin is now pulling back more so than the suburbs. We've been now in a season where the suburbs were pulling back primarily because of new construction, but Austin was holding steady. We're now noticing a complete reversal where the suburbs are now holding steady and Austin is now pulling back. Really interesting. When I looked at this data, it was like, wow, I mean, that is really fascinating. As a matter of fact, let me go ahead and pull this up here for you. We're going to take a look at is it residential price or percentile analysis? I'll take a look at both just to make sure I actually get the right one. It ought to be one of the last pages here. I created this for Seth. Yeah, there we go. I created this page for Seth. Look at that. Here's that interesting switch that we just now noticed. This has not happened for years. We have year over year, don't focus on price because Austin is still more expensive than the entire MLS. But when you focus on the percentage difference, the suburbs are actually positive. Whereas the city of Austin, not only negative, I mean, average price is down, average active price. We were not seeing that. We were still seeing the average active price hitting record highs, got up to $960,000 even a few months ago. That has reversed way down 4.87%. We've got the median price down. The average sold price is down. The median sold price is down. Whereas the entire MLS is actually up, taking into account the city of Austin. Really interesting reversal. Really interesting reversal. And of course, city of Austin makes up our real estate. It's still the most populous county in the area. It's got the higher price in the area. If this momentum continues, and you can see right here on that percentile analysis per price range, we've got the city of Austin down 0.9. And the only pricing that is up is the 20th percentile, up 1.3%. Everything else is down. But here's that reversal. The bottom 25th or bottom 30th percentile is actually picking up steam. Outside of that first 5th percentile, which is really small number of transactions, you really can't count on that. The pullback within the city of Austin is actually being driven by the higher end homes. Those are actually coming down on price now year over year, more so than the less expensive homes. So that is a reversal that we just noticed this past week. I mean, today, what I do is I pull up all this information and I just spent a good hour and a half just studying it on, okay, what exactly is going on in each segment of the market? And that's something noticeable that I noticed. It was like really interesting. So much so that when we add every single thing that sold for the entire year, City of Austin is still positive, but it's pulling back. Let me go ahead and click on City of Austin because you're going to notice something really interesting here. This is going to come up. This is going to be your 25-year appreciation. And look what's happening. So for the entire year, every single property that has sold, all 9,218. So far this year, we've had 9,218 properties sell in the city of Austin. The average price is up 2%. The median price is up 1%, 0.6%, rounded up to 1%. But look at what's happened over the past 3 months. 565, lower than the entire year. 550, 548. We have to go from March to August to get the higher amount. And then you look at September, October, November, this number goes down. It ought to carry over into December. December of last year, we're at 572. November, we're at 565. I don't think we're going to have enough closings in November and then a few stragglers from October to go negative for the year in the city of Austin, because we've already had 9,218 properties close, and we did have a number of them close at that 590, 593, 590, which is way higher than that 575. It was a really good March through August for the city of Austin, but everything changed going into September, and it's not recovering by a substantial way. We had a 6.5% drop, then a little bit of an increase, a little bit of an increase. So something to be on the lookout for in the city of Austin. You have to be very discerning as you're listing your property, especially when you go into the 05, the 03, the 02 zip code. A lot of bloated inventory, very expensive homes there. So really price your homes accordingly, analyze the market, be obsessed with the market. Let's take a look at the absorption ratio or absorption rate. This is where we take the sold and we divide it by the active. 14.23. 14.23. We're going to take a look at the activity index also. And let's pull up the activity index. We're going to go to Insight and Statistics. We're then going to go to Market Performance, and we're going to click on Activity Index. Let's take a look at this. We are ending Activity Index. You know this, my favorite one, pending divided by active plus pending, gives you the direction of the market. We've got a little cheat sheet here that you can pull up and you can memorize. If you're at or under 15%, that's a crisis, that's a freeze. The red line is 20%. When the activity index dips under 20%, it signals caution. Okay. And then we've got softening market 20 to 25, equilibrium 25 to 30, expansion 30, 45 plus. So let's see where we are ending the month of November. 17.6. And this is going to mark the 1, 2, 3, 4, 5, 6 months in a row where the activity index is under 20%. And the last time this happened was right here. Right here from 2010, 2011. We also had that happen right here, 2008, going into 2009. So we started 2008 into 2009. Actually, it kept on going into 2009. Got a little bit better 2009. We had 4 months where It got better, got up to like that 21, 20. It dipped down a little bit back into 20. So that was a little bit of that break. That is what we call the bull trap. Then it went back down a little bit. Then there's another little bull trap right there. Part of this is seasonality. And then we had that long stage. That was the phase two of the market correction. That was like, okay, here we've got phase one. Okay, everything's better. Oh, no, not as good. Okay, everything's better. And then there's that phase two, which is what we spoke about on the last meeting on Friday, where a lot of people are saying, is the market entering a phase two type correction? That's the word in the street. That's what the headlines are selling right now is, are we expecting a phase two style correction? My response to that is we're going to have to wait until mid-January, second or third week of January, to see how many new listings are flooding the market, entering the market from the quits that we experienced here in 2025. So that's going to have to be my guess on that. A few things did come out over the past few days that are noteworthy. One of them is going to be the Freddie Mac House Price Index that was released, and then the National Market Index. These two were updated, and let's take a look at these. This was posted November 26, and the data is for the month of October. And this tracks not only the top 40 cities, but also all of the cities, but we focus on the top 40 cities. So let's take a look at the top 40 cities. Lagging indicator. It's released at the end of November for the month of October, which is the average of October, September, and August. So they take the average of the 3 months, release it a month later. A very lagging indicator, but very historical, very accurate. So let's see where Austin performs. Drop from peak, we're at 18.5%. We've known that we're number one. When you look at from January 2020, we are still up, of course, 35.4%. From January 2021, we're up 13.8%. And from October 2022, we're down 12.1%, followed by San Antonio. San Antonio starting to catch up at 2.3%. Year over year, I am not happy to say that we're back to number one. We are back to number one at 7% drop year over year, followed by Tampa at 4.4, San Antonio 4.1, San Fran 2.1, Dallas really going up there 1.8. We have Dallas and Houston. Isn't this interesting? When you look at the top 40 cities population-wise, we've got Texas, 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 and Texas. So we've got 4 cities. We have 1, 2, 3, 4, 5, 6, 7, 8. 8 cities have gone down in price year over year. When you look at the top 40 cities for population, 50% of those cities are in Texas. Interesting. Month over month, we have dethroned Tampa. We're down 4.4%. Tampa down 4.12, followed by Jacksonville 2.71, and then here's Dallas 2.43, Houston 1.86. And then let's keep on going. Here's our index going all the way back to 1975. And where do we fall compared to all 389 cities that are tracked? We come in number 2, thankfully. Punta Gorda comes in at 20.9. Now, when you strip away the population index and you look at every single city, Florida is just taking it. We've got number 1, Florida. We've got number 3, number 4, number 6, number 7. Lots of cities in Florida are going down. Really interesting to see this. But we're also starting to notice a few other Texas cities. We've got Victoria, Texas. We've got Corpus, Killeen. A lot of cities within Texas. Harlingen. We've got Brownsville. There's Brownsville. San Antonio right there, down 5.2 from peak. And of course, we're down 18.5. Out of the 384 cities that are tracked, you can see that here, 84% have gone down in price. 84% out of the 389 cities that are tracked have gone down. This information was released November 25th, and this is the national market index. And let's take a look at what's happening at the national. This is where we take the HPI, the home price index, and we divide it by the CPI, the consumer price index. And this is adjusted for inflation. And we can see that it came in at 1.01164. It was just updated. And let's compare this to the Austin area. I've got a really nice little comparison. Or this is actually, so we're 40 months into the correction. The last time the market corrected at the national level, 40 months into it, we were down 25.14, which is a very similar number than the Austin correction is so far. When you adjust it for inflation, and we have that information. Let me go ahead and pull this up for you. Adjusted for inflation, we're down 29.64. Adjusted for inflation, the national market 40 months into it was down 25.14. So we're actually outperforming the national market from 2008 adjusted for inflation, which is really shocking. And here we have the inflation adjusted price increase. So the national market has actually gone up in price by 70.7%. The Austin market has actually underperformed the national market by currently at 68.3%. When you index January of 2000 as a starting point, looking at value, really interesting to look at it this way. So lots going on in the market, you all. Let's take a look really quick at the economic calendar. I did email you this morning some timelines and dates to be on the lookout for when you look at the economic calendar, and which dates are going to be significant for us and which dates you really don't have to worry about as much. And I'd say the dates that are going to affect us more than any other dates, we got Monday, Wednesday, Friday. Now, Monday, Wednesday, Friday, more so today at 1900 hours, also known as 7 p.m., we're going to have Chairperson Powell. He's going to speak. It's going to be interesting to see what he has to say. Good news, fairly decent news came out at 9 a.m. this morning. Institute of Supply Chain Management Manufacturing Prices came in less than expected, higher than previous, but less than expected. A lot of rumblings going on right now with the Bank of Japan. They announced a possibility of actually increasing their rates. That is primarily what drove the bond market down, therefore the yields up. So we are up 0.8 basis points, or 8 basis points, not 0.8. I wish it was 0.8. We're up 8 basis points right now in the bond market. With that, do expect a repricing with rates, and that's primarily being driven by news from the Bank of Japan that came out this morning. Tuesday, not much stuff is going to come out on Tuesday. It's going to be somewhat light. I mean, we do have job opening, labor turnover. We've got some economic optimism, but a lot of commodity data. Going into Wednesday, ADP non-farm payroll, that's really going to be important. We've got a lot of pricing information coming out on Wednesday. That's going to be very important. A lot of inflation indicators out on Wednesday. And then we've got Thursday. We have another little bit of a pullback when it comes to data, but it's going to be more reactionary to Wednesday, people processing that information. And then Friday is going to be really important, more so because of the PCE, the core PCE, personal consumption expenditure. That's going to be an inflationary gauge that the Fed looks at very carefully, and that's going to be really important for us, really important for rates. My advice has not changed in years. It's going to be that lock and float advice. So this week is a fairly important week, Monday, Wednesday, more so on Friday. Next week, we are going to just be super busy when it comes to rates. Every day is going to be important next week. Monday is going to be reactionary to Friday, and then you go into Tuesday We've got more job information because now they're updating everything from the past. So we've got this week from the previous that wasn't released because of the shutdown, but more so on Wednesday. We've been holding our breath on inflation data. In Wednesday, December 10th, we're going to be flooded with inflation data, and that's going to be huge for the market. And then, of course, the following week, when you look at the 15th to the 19th, we have what? We have, let's see if they have this here. We should have, when is the Fed meeting? I thought the Fed was meeting then. Am I wrong that the Fed is meeting then? I thought the Fed was meeting, or is it like this past week? I'll figure that out. So the Fed is going to be meeting here, making a decision on interest rate cuts, and we're just going to have to wait and see. Maybe it's like 3 weeks from now. I'll have to pull that up for you all. I'll have it ready for, let's see, it can't be from the 25th. Oh, I was like in November. Let me take a look at December 8th through the 10th. We already went over that. Let me take a look at this. Yeah, for some reason, it's not showing up. Yeah, I'll give you the information of, okay, December 9th and 10th. Thank you, Sonia. That's what I'm talking about. So December 9th through 10th, that's going to be next week. I don't know why they don't have it on the calendar right here. So we've got December, oh, here we go. I just missed it. Interest rate decision. There we have it, 1,300 hours on the 10th. So this week, Monday, Wednesday, Friday, really important. Next week, every day is important. Every single day is important. So I am really excited for next week. And the good news is that next week we have a full week. We have our Monday morning touch point, our Wednesday, we have our Friday meeting. Please be sure to join us for our Friday meeting. It's going to be our last meeting of the year. December 12th is going to be our last meeting of the year because we have, we don't have anything on the 19th. ABOR is closed that day. And then we've got Christmas, day after Christmas, the 26th. So there you go, you all. It's going to be the last meeting of the year. So be sure to join us. It's going to be a blast. It is 11:07, you all. Any questions? Any questions, comments, concerns, criticisms, or complaints? Any questions? Any company that handles eviction, Lucas, reach out to Lucas. Give Lucas a CHL a call. I heard it's one of the things that he likes doing the most. He's probably just waiting. He's like, Lucas, I have a Christmas present for you. Get him all excited. Wrap it in like a gift. Like actually wrap the note. Don't send him an email. Put it like a gift, a little box. And he opens up and it says, my client needs help with eviction. I want to see his face whenever you do that. That's how much he likes it. Just make it a present for him. Yeah, reach out to Lucas. Yeah, send a text with confetti on it. I love that. That's even better. Good stuff. Any questions, you all? Questions, comments, concerns, criticisms, complaints? Going once? Going twice. I noticed that many of y'all sent over transactions for review. I will get on those. Super appreciate you all. Excellent job with everything, you all. Super proud of the team. Really, really excited to get back this week. Look forward to our training on Wednesday. If you do have any questions, please feel free to reach out. Otherwise, have a great rest of your day, and I will chat with you later.